Hello guys, another day, another vlog. So today we will talk about the Federal Reserve Bank in the US, and it seems they cut the interest rate again, and why this means that stocks and property will go up. Stay tuned. So let's talk first, what is the Federal Reserve Bank in the US? So basically they are the bank of the banks, okay? So they're deciding if they increase or cut the interest rates which the general banks can lend money from them, okay? So basically every bank lend money to lend it to customer, companies and so on. And the short Fed decide which interest rate will be the main interest rate banks can lend money. So think about it. Why this could be so important for the economy? Because when the interest rate is low, companies can, companies and customers and consumers like you and me are going to the bank and get loans because the interest rate is so low. On the other hand, if the interest rates are high, we rather, don't take the loan or wait or take other opportunities to get money from, right? So that's why it's so important why the Fed decide about the interest rate in the US, because if the interest rate is low, the companies and consumers take loans and spend the money in the economy, so the economy go up. But if the economy is up, the interest rate should be a little bit higher, so there will be not too much money in the market and everybody getting loans and spending it, which would mean that there is a inflation, which is basically the loss of value of money. So current boss of the Federal Reserve is Jerome Powell. You have seen maybe his name or his pictures, that's him, around Trump, because Trump, he was the one who chose Jerome Powell, but has now statements done that, maybe he changed or Jerome Powell should be changed. He has not the authority to change him actually, because the Fed is acting as their own entity for the US government and cannot be influenced by any other authority, even the president of the United States. So basically, once he's chosen, he has a certain amount of years that he can serve as a boss of the Fed and then basically decide if the rates should be high or low. They're doing this by analyzing economy data and deciding then, the economy is slowing down, so we should give the interest rate low so people loan money and spend it in the economy. And companies, for example, invest in new machinery, they invest in stuff, they consume, they buy back stocks and so on. So that's why the economy will profit from it. If the economy is very good, then they try to hike the rates. So the Federal Reserve Bank meet very regularly, and it's like an internal meeting where they analyze economic data, and based on this they decide on the interest rate. So what the public, the stock market, everyone basically receive is the minutes of meeting of this meeting. And they can basically interpret if the federal bank will decide to increase or lower the interest rate. So just recently they announced in minutes of meeting where they said that the economy may be slowing down a bit, it's not so good, so we should maybe consider to lower down the interest rate, which is the right move. So what happened then? It's basically money goes into the market, people get loans, and what the usual people do, they buy properties, they invest in cars, they maybe invest in holidays, they consume. So when they consume, the economy goes up, and then everything goes in the right circle. What companies actually do, they invest and everything, so everything goes up. And when there's money in the market, there's just a certain ways of return on investment on money. So the people decide to, oh, I will put it in stocks, I will put it in properties. And that's the main reason why both will go up, as long as the Fed decides to keep the interest rate low. So here's actually a chart, you know, how the Federal Reserve Bank decided over the last decades. And you can see that it was very, very high in the 80s, where we had the boom in the economy, and as long as the economy slowed down, the rates go down as well. Basically, you will see that it's a very, very, very strong entity in the US or in the economy market. You had seen this maybe what happened in the stock market in October. In October last year, the Federal Reserve Bank may be considered to rise the interest rate, and the stock market lost like 30% because they didn't align with the opinion of the Fed, because the economic data was not so strong, and they thought, hey, if now even the Federal Reserve increased the cost of money, of loans, then there will be less money in the market. So everybody tried to, you know, take some profits out of the rally that was over the last, basically since the financial crisis 2008. Another big reason why the stocks will further go up is basically, if you follow the business news, you will see that a lot of companies announce now stock buybacks, okay? So that means that they're buying available stocks on the market, buying them back, and basically increasing then the stock market price of the company. Because in the end, you know, every good CEO wants to have the stock price high, so they run out of options. If they have cheap money available, they invest in the people, they invest in machinery, they invest in further expansions. But at one point, it's basically they say, hey, you know, my contract for a regular CEO is maybe 2 to 5 years, so I make sure that I get my bonuses, and my bonuses are locked to a certain stock price. So basically, they try to push the stock buybacks and push the prices of stocks even higher. I hope you liked the vlog. If you want to have more about vlogs about the economy and about business, just subscribe here. I love to hear your comment, like and ring the bell for any further videos to be immediately notified. Don't forget, the grass is greener on the other side.